Hey guys, JD here. So this is my double up of the day. Easy money trade, 29 seconds, looking pretty good. It got a little shaky there for a second, but pair is doing exactly what we expected to do. Today we having dollar strength. So hey, you go with the dollar when it's strong. Eat another easy money setup coming through. Let's get ready to count it down. 9, 8, 7, 6, 5, 4, 3, 2, 1. Say it with me.
Easy money.
So the question was asked, does price action work? Yes, it does. But why does it work? In this video right here, we're going to take a deep dive into why price action is king. Okay, so let's jump right in. Listen, many of you have heard me say price action is king. I don't know how many times, right? I am a price action trader. I love trading pure price action. That means I'm not really using that many indicators, okay? I typically only use one, which is the 21 moving average, exponential moving average, 21 EMA. That's really the only indicator I use, okay? And we're gonna touch some more on that, but price action is king for a very specific reason, right? So why, Jay? Why do you say price action is king? Okay, here it is. Here's a point that many people who argue with me in the comments about indicators. Here's a point that many novice traders miss. No, you know what? This ain't even no point. Here's a fact that many novice traders and people who love to argue with me about indicators miss. So let me ask you a question. First, what are we trading? What are we trading when we trade stuff, right? You may say, hey, I'm trading Apple, or you may say I'm trading the Forex, right? You may say I'm trading currencies, or you may say I'm trading the S&P 500 if I'm in futures, right? That's the asset, that's the name, but what are you trading? We are all trading prices. You are trading the price of the S&P 500. You are trading the price of the euro dollar pair. You are trading the price of Apple stock. You are trading the price of corn. You are trading the price of gold. You are trading the price of oil. Okay? At the end of the day, no matter what you are trading prices. This is why price action is king, because it's the purest form of trading prices. When you're trading price action, when you're using price action techniques and strategies, AKA I call it just reading a price chart, you are reading prices. You're reading the movement of prices. And this is why price action trading is king, okay? Let's touch on indicators, all right? For all the people who love their indicators to death, at the end of the day, this is what your indicator is doing. Your indicator, and this, I don't care what indicator it is, even my 21 EMA, all indicators work the same. Your indicator is taking prices, is taking the market data, which is price, putting it into an equation, and then it spits out a straight line, a squiggly line, a color, a number. All your indicator is doing is massaging price and spitting it out in a different format for you. Okay, so people who use indicators, they depend on the indicator to massage the price to tell them something. I just look at a bare price chart and read the price action, read what's going on. What do I need the indicator for? I don't need you to massage the prices. You know, I don't need you to be late and lag and on what's happening when I can just look at a bare price chart and say, oh, prices are going up now. Okay, price. It's all about prices. Okay, it's all about prices. And I apologize. I said I wasn't going to be indicator bashing. but somebody else upset me in the comments, so y'all got me back on my soapbox again. Price action trading is king. Indicators massage prices, right? The indicators put prices in some type of equation that's supposed to do something. Sometimes they're right, sometimes they're wrong. There's good indicators, there's bad indicators. But what I am saying, you don't even need them if you just learn how to read prices, okay? So let me give you an example. If you were to take the time to just study a oil price chart, right, for 30 days, you would, over that 30-day time period, if you wrote down the open and close of the price every single day, by the end of the month, you would be able to say, hey, oil at its high was trading at this price. Oil at its low was trading at this price. I noticed over a 30-day period that every time oil got down to this price, it started to go up. Every time oil got up to this price, it started to come down. You know, we're really talking about supply and demand, or others like to call it support resistance, right? So once you have that information after studying that, only studying the oil price chart for 30 days, once you have that information, you could begin to trade oil with no indicators, not even a 21 EMA. You could begin to trade oil with no indicators, no other factors, but basing your entries on price. Knowing that, hey, every time oil has got to this price point, it tends to go back up. The market says that this is about as low as a barrel of oil should be under these economic conditions. Boom. Then you could take trades off of that information. Pure price. Nothing else. No indicators needed. No news reports needed. You could throw some fundamentals in there if you want to, but really you could just look at a price chart, study it long enough to find out the high price, the low price, and go from there. Okay. So prices, it's all about prices. Okay. I trade a lot in the binary options market. A lot of you are in the binary options market. I just got to keep it real with y'all. Binary options traders don't have no idea about prices, right? I'm just, you guys don't think about price at all. All right. And we need to do better. Okay. I said we need to do better, right? This is why lately I have been trading the real pairs. I like it a lot more. I'm going to be honest with you, because I got some videos. I don't know when I'm gonna release this, but there's some advantages, two clear advantages from trading the real pairs in binary options market. But now I'm looking at price more. Okay, if you talk to a futures trader, all right, they're going to tell you what today's price of the S&P 500. Say they trade the S&P 500 in futures. They know the price. They know, like, hey, we're at 5,400. This is the all-time high. It ain't been higher than this, you know, because they're trading the price. Price matters, okay? And when you learn price action trading, you will start to pay attention to the actual price of these assets that you're trading. Okay, so price action is king, because at the end of the day, we are all trading prices. All right, we're trading prices. So it's been a while since we've done a work study lesson. Okay, so I'm just gonna go to a chart. I tell you what, I gotta keep 21 EMA. I was thinking about, I was gonna go really bare naked out here with it, but man, the 21 EMA, it is. Okay, let's talk about 21 EMA, because somebody's gonna say, oh, you always bashing indicators, but you use the 21 EMA. It's the indicator. We want to gag sometimes. Listen, here's the thing about the 21 EMA. It's not massaging prices. It's not going, prices ain't really going into some big, huge equation, spit me out some kind of squiggly line or number or something like that. It's giving me the moving average. It's giving me the average of prices over the last 21 bars. All right. Okay. So I can use that information in my trade. You know, that information is valuable and it's not lagging. It's the actual, it's the actual moving average of the prices. Okay. So this is why the 21 EMA is the one indicator that fits in the price action trading. All right. So it's been a while since we did some work study lessons. We're just going to we're going to look at some possible trades you could take. we're gonna do this in the binary options market. So let's say we're gonna take 3-minute trades. We're gonna be looking for trades that would have worked at 3 minutes using nothing but pure price action. All right. And when I say that, once you start to look at a price chart over and over and over and over again, you'll start to see certain patterns. All right. The market moves in twos. There's something else called a market cycle. Okay. And also those two things create these setups that I like to take. One is called a second entry. It could be a second entry long or a second entry short. Another one is called a higher low. It could be a higher low or lower high. All right. And then lastly, we have range fades. So these are 3 very powerful price action setups that you can take. If you've never traded price action before, if you don't understand price action, we're going to go to some charts so we can look at these 3 powerful setups that anybody can find on a price chart each and every day to start to trade price action, which is king. All right, so let's go over to the charts. All right, so we're on some charts. We're looking at Apple here. What can we see at a glance? I mean, so basic price action. If you understand the market cycle. Now, the market cycle is something that happens in all markets, no matter what you're trading. It's just the way markets move. The markets move in a cycle. They also move in twos. And so when you learn those 2 key factors, it really helps you in trading price action. So I can clearly see that we're in a downtrend. I know that because we're making lower highs, lower high, lower high, lower high, lower high. I also know that by just staring at my 21 EMA at a glance. This is why I love the 21 EMA as a moving average, and the average price is steady dropping. So we're in a downtrend. And so here's the market cycle. This is actually a complete market cycle. You have a trend down, a trend break, and now a retest to new lows. This was the current low. Let me mark it up. Let's see, let's grab something. The low was right here. Bang. Now we got a new low. Bang. That's classic market cycle. Trend down, trend break, retest a new low. Some of you may not understand what I'm saying about a trend break, so let me show you that real quick. If you had to put a trend line on here, which I don't usually use them just because I use the 21 EMA, but this definitely helps you see better. If we had to put a trend line on here, I would have had it going about like that. This is the trend, but see how the 21 EMA is parallel to it? That's why I don't really need trend lines. But you see we're headed down, right? When prices break above here, especially when it got way up here, that's a trend break, right? So trend down, trend break, retest to new low. That is the market cycle, okay? That's how you read a price chart right there. It's that simple. Now, a setup that you could take with this in this situation. Let's delete some stuff. Is a second entry short. So let me just show you where one was at. It was right here. This was a low. Push up. First entry. Don't go there though. Push up. When this candle broke lower right here. Let me get my arrow back. When this candle broke lower right here, that triggered a second entry short. You could go right there, and that was a home run. Whew, that was a homer. Then you got another one right here, really. Push up, first entry, push up. You could go right here. This is another second entry short, right? And this one here is right off the EMA. Both of those trades are basically homers. Then you kind of get another one right here. Push up, first entry, push up. You could go right here or right here. Take your pick on that one. Either one of those, 1, 2, 3, home run. So that's the second entry short. So those are some trades you can take when you understand the market cycle. Now, let's look at it. I'm gonna show you another trade you could take on this same pair, because we got the trend down, trend break, retest, and new low. The new low is in place. So what does that tell us? That tells us that the market cycle is over, right? So we should start trending up. So understanding that information, once you get this low right here, let's put a circle on it. Once you get this low, right, that's the low that's in place. That's the new low. See this one right, this low right here? This low is higher than this low. That's a higher low setup. And if you get a good candle that breaks higher than everything to the left, that's a go signal. So this one ain't great because it left a lot of stem right there. But if you really felt good about it, because one thing about it is you had a lot of room back to the EMA. And in that case, you're expecting the EMA to act as a magnet, which is exactly what it did. And so 1, 2, 3, that's a win. Okay. Now you may say that a better one is actually here though. Here's a low, push up, higher low. This low is higher than this one. And another strong candle up. You definitely can go here. 1, 2, 3, that's a win. And now see how we're pushing up now? Now this is the beginning of probably an uptrend because this down market cycle is over. So now we have to have an up market cycle. Now it may not go back way up here. Who knows where it's gonna go? But that's price action, right? So what are we looking at? We got a downtrend here, and we have seen a second entry short, and we've seen higher lows to reverse. This is a reversal pattern trade here. All right, let's see if we can find something trending up. I think I saw the CAD trending up earlier. Let me go look at it. Let's see, CAD Swiss. Okay, so look at this Swiss look. All right, so you want to see you want to know what a strong trend looks like? First, let's do this. Where does a trend begin? A trend begins when it breaks out of a range. So this was a range. Okay. We got a top. We have a bottom, people. Okay. So first of all, from range setups, when you're in a range, you fade the range. So let me just mark a couple trades up there since they're sitting here. So once you know you're in a range, well, you really don't get that many touches. You definitely buy here. All right, range fades are born. You basically buy there. Okay. And this didn't hit the top. So you're probably hesitant to sell here. But when I get this high, lower high right here, I may sell right there. And then you got another one high, lower high right there. I may sell right there too. So that just shows you some lower highs. And you got another one high, lower high right there. I might sell right there, especially off of this hammer off the EMA, and bam. Okay. Just throw some trades out there for you. But if you're in a range, fade. If you're in a range, you fade the bottom, fade the top. That means when prices get to the bottom, you buy. When prices get to the top, you sell. That's how you trade ranges. Okay. But now, once you break out of the range, and this one was a this one broke out, and when you couldn't get back, you don't go here, you don't even go here, you wait for the pullback, which basically happened here. So this is your first good trading opportunity right there. You go on that puppy right there, 1, 2, 3, easy win. And then you just take good strong candles off of the 21 EMA. Okay, we pushed up. We're a little bit too far away from it here, but man, this was a nice trend. You go there, 1, 2, 3. Then you got a high here, push down, first entry, push down right here. That's a second entry long. You can go there. Terrible signal candle though. This one I would caution, but it works. 1, 2, 3. Then you get another low, push up, higher low. Nice. This is signal candle is small, but this monster here I like. 1, 2, 3. That's another win. Then you got to wait for it again. You got a new high right here. Push down, first entry, push down, second entry long right here. Let's see, this one win. You go right there. 1, 2, 3. That's another win. This is just riding the trend right here. Then you got another high, right? Count it up. Push down, first entry, push down right here off the EMA. Second entry long. Does that one win? Yep. 1, 2, 3. Then you got another low, push up, higher low. Go right here. Boom. Count them up. 1, 2, 3. I mean, hey, why stop there? We get one more push up, push down, first entry, push down, second entry right here. This one is a lot more. The pullbacks are much deeper, but this beautiful signal candle right there, 1, 2, 3, home run. All right, so that's price action, people. That's simple trend trading. using a 21 EMA, using understanding prices, right? Once we broke out of this range, we're trending up. It's trend time, right? If you break out of a range, that's the start of the trend. So just having that information, knowing that, knowing that we broke out of this range, right? And so that's going to be the start of a new trend. Man, all these trades was just sitting there. Well, no, excuse me, they weren't just sitting there. These trades were going to develop, right? And you will find second entries and higher lows in every trend up. You'll find you'll find second entry longs and higher lows in every trend up. And you'll also find second entry shorts and lower highs in every trend down. These are basic price action setups that occur over and over and over again every day in every trend. And that's just another reason why price action is king. It's just another reason price action is king. And another thing you could do is just, hey, I'm gonna tell you, if you are brand spanking new to trading, right? Let me go back here. You truly could just mark up ranges. You could just find ranges and fade the range, buy here, buy here. Man, just buy at the bottoms and sell at the tops. That is such a great strategy, and people just don't do it. Just don't. You know why? You know why people don't take range fades as one of their main trades? If you want to learn price action trading, you can visit www.jdhyder.com, where you will find the IOTS price action trading system, which is the course that you need to begin to increase on the sudden. Because it's boring. That's it. It has to be that. I mean, I don't know what other reason there could be. Ranges are boring and profitable. Ain't that crazy? Everybody wants to trade 30 seconds, a minute, 5 seconds. You want to, that indicator is going to give you, 10 signals every 2 minutes. All right. And you're also seeing how many losses you're getting, taking every signal that indicator gives you, right? When you could just be patient, mark up a range, wait for it to get to the bottom or wait for it to get to the top and make money. But no, everybody wants the excitement of trading, the fun of trading. Man, if trading is not boring, you're doing it wrong. Okay. If trading is still exciting, if trading is still giving you butterflies in your belly, you're doing it wrong. Okay. If trading should be boring and profitable here, you know what I'm saying? Are you here for excitement? This ain't no, this is not the casino. This is not an amusement park. This is, what I'm saying? I mean, yeah, I see it as a game, but it ain't game. We're not playing blackjack. We're not playing tonk here. You know what I'm saying? We're not playing Uno. You know what I'm saying? This ain't Monopoly. This is real money out here. You know what I'm saying? If you want to have excitement, do something else. You know what I'm saying? Pick up another hobby. You know what I'm saying? This should be your business, and business should be boring and profitable. Okay. Business should be boring and profitable. All right. If you've been struggling, just take range fades, take them indicators off, find supply, demand, find or support, resistance, whatever you want to call it. Box up the range, wait for prices to get to the top, wait for prices to get to the bottom. You know what I'm saying? Take a 5-minute, 10-minute trade. If you're trading binary options, take a 5-minute, 10-minute trade, boom. If you're trading Forex, you know what I'm saying? Put your stop loss under the last low and go the opposite direction. You know what I'm saying? If you're trading futures, do the same thing. Put your stop under the last low of the range and go the opposite direction. It's simple. Okay. It's simple price action. It's a high probability strategy. Don't take the breakouts. Okay. Just look, and not until you get a breakout pullback, like I showed earlier. But range fades, man. You want to make money? Get on the boring path. All right. Get on the boring path. Even when you're in this trend, you have to wait, right? You can't, you have to wait for a setup. You got to wait for a second entry. You got to wait for a higher low. You can't go before the candle closes. All of these little rules are in place for you to be profitable. Okay. But you have to, first you got to have a good system. You got to learn that system, but it's not hard. It's all about prices. You know, the 21 EMA helps you know what the average price is, and prices love to bounce off the average price. So you don't go long up here when you're far away from the EMA. You wait until you come back to it. Here's a tip. Here's a tip of the day for you. Whenever prices try to do something twice and fail, they're usually gonna go in the other direction hard. So you see right here, it tried once to go lower, it couldn't, pushed up. Tried a second time to go lower, it couldn't. It found support twice right in the same area, and now boom, it took out everybody who had went. Everybody who went short here and here. This candle right here ate all those stops. Ate all those stops. That's price action, and it just happens like that all the time. So what you do is wait for that second attempt to fail, and you go the opposite direction. You'll make so much money doing that. You will make so much money going the opposite way of failed attempts. So much money, because it's really the heart of the second entry. So look for second entries, look for lower highs, look for range fades, and you'll start to murder the market. You will start to murder the market. All right. So I hope this video helps you out. You know, I hope you learned something. I hope you understand now why price action is king, because we're all trading prices. That's what it comes down to. All right. So this is a great time to like, share, and subscribe. I greatly appreciate it. And hey, I'm gonna get out of here. I'm gonna sign off with that one. And my name is JD. And as always, I wish you increase on the Sutton. Bye-bye. Knowledge is power, but only if you take action. So take action and watch this video right here.